The crypto market has had enough. Oh man, so Bitcoin is breaking out despite a bad CPI readings. Traditional markets are down, but Bitcoin is breaking out. What is going on? We're going to go straight into the charts here to show you the structure that Bitcoin is breaking out from and whether this move is sustainable. Major altcoins are moving. We've got Ethereum up 2%, Phantom up 9%, BNB flat after yesterday's BUSD drama, but Matic up 3%, Cardano up 5%, many altcoins moving here, Optimism 6%, Render 13%. We're going to break down exactly what is going on, fill you up to speed with what the CPI reading said and why we're getting this weird decoupling. Smash the likes, don't forget to subscribe. Let's get straight into this, guys. We need to recap on what just happened because the CPI reading came out here where this yellow reading was. You saw some crazy trader action and then Bitcoin just slightly later here, an hour after the CPI, once the traders were done, exactly what we said on our live stream, let the traders do their thing. It deciding on its direction, it went for a move and a little pullback here, but this move here pushing Bitcoin up to 22,300 was explosive. Now we need to see what is going on because we can see here the same move was not reflected here on the S&P. The S&P here is down on the day. Bitcoin is up on the day. What is going on? Loads of volatility. First of all, let's take a look at the structure we were forming. If we sit here on the 4-hourly chart, I tweeted out earlier today that we were in a very important descending triangle here, and the CPI would give us the decision. If you're not following me on Twitter, at RealIjaz1, make sure you are there. And this big 4-hourly candle saw some crazy volatility to the upside, crazy volatility to the downside, but ultimately gave us the breakout with serious volume. Now we need to see what happens from here. Let's drop down a time frame down to the hourly to get some more information. And you can see here initially when the CPI came out, it led us to come to the bottom of the wedge, and then the hour later, like I just showed you, we got the breakout. Now we're getting a little bit of a pullback. Let's drop down a little bit further. Let's drop down to the 15-minute chart just to see what's going on here. We hit the top of the channel, came to the bottom, broke out. Now, do not be surprised to see a retest. This is very normal, but we need to hold the integrity of this. And then when you break this previous peak from a textbook perspective, that is when you'd enter your long. Again, if you guys want to trade any of these moves, you can do so using BYBIT or BitGet, links in the description. Those are the platforms I use to trade. Please do not trade with anything more than you're willing to lose. If you're inexperienced, practice with some lunch money. Practice with some lunch money. So that's what I'd be waiting for, a retest, a break of the previous peak, and then we'll be looking to see where this could head to. Let's now zoom back up to the 4-hourly chart to look at what are the key levels here on this chart. And the key levels here are very, very important. First and foremost, you can see that we held support when we broke down from this ascending broadening wedge, right? This was the structure we're in. Ascending broadening wedge, we broke to the downside. We held support at the green line, which is a key level from this point, okay, where we consolidated here, and we created a double bottom W pattern. Okay, so if you're looking at what we're forming there, let's drop this down to the hourly to make it a little bit easier to see. This is a W pattern, okay? Neckline is there, and then you expect to break out in this direction. So this is very important, and now we can start to see that maybe we can see a movement back up to the level where we fell from, which will bring you back up to 22,700. Now that's not going to be easy. The bears will be trying to step in to push us back down to the green line at 21,500. But we've got to remember, this is very positive news. Let's take a look at what happened with CPI. CPI was expected, this headline figure here, was expected to come in at 6.2% year over year. This came in at 6.4, so 0.2 higher than expected. The month over month figure was expected at 0.5 and it met. It came in at 0.5. But the core figure was expected to come in at 5.5 and it came in at 5.6, okay? So this was a hotter than anticipated reading, and you're seeing that the broader US markets are falling to the downside, as you'd expect, right? I said we could see 0.75% to 1.5% down in the S&P, and you're seeing a 1% down day on the S&P so far today. NASDAQ down about 1% as well, and the Dow Jones down more than that, which are your blue chips. So we got to understand that this is a moment where crypto is saying, hang on, enough is enough. We're having a little bit of a decoupling today, and this is very rare and very, very interesting, because if you look at it, what have we always said? We've said that crypto is inversely correlated to the dollar index because it's associated as a risk on asset. When the NASDAQ is green, when the dollar index is red, Bitcoin can be green and run. That has been the status quo since about 2021. It wasn't like that before. We've been heavily correlated to traditional markets. And the question has been, when are we going to rotate away from this correlation? When is Bitcoin going to start moving of its own agenda again? And today we've got a slight taster of that because the dollar index is here. Okay, the dollar index has just moved up slightly here. It's having a green day, just slightly, but it's a green day. It's running into its daily EMA ribbon, and you can see what it's trying to do. But Bitcoin doesn't care. Bitcoin is trying to hold a green day, and many altcoins are moving with it. In fact, dominance has fallen today, which is showing that altcoins are running faster than Bitcoin, a sign of risk on. Remember, if risk is off, people would move from altcoins into Bitcoin. But right now, they're moving into altcoins. Ethereum up 2% here on the day, trying to bounce from its EMA ribbon. Phantom, explosive, trying to close back above its EMA ribbon to maintain the bullish trend. Again, can this now break above its previous peak of 65 cents to maintain this move, right? Because, and this is part of the problem with many altcoins that have done really well, because Phantom was so explosive on its upward trend, when it bounces from its EMA ribbon like it's trying to do now, it's not enough for it just to go to 58 and bounce back down. This will be a downtrend. That's not good. So now it set itself a higher target. It needs to go create a higher high, even if it's slightly, and then a higher low, and work its way up like that. That is what you need to see from Phantom to maintain this bullish momentum on the daily. Other coins which are moving include the likes of Cardano. Yes, Cardano is trying to close its weekly candle above. Nice move here from Cardano. Can it build on this? Decent enough volume. Can it close this candle here on the day-to-day? And can it work its way above its EMA ribbon and back into an upwards trend? Algorand also up 3%, trying to hold its EMA ribbon. Again, it will face resistance at that 28-cent mark. Let's also take a look at Render. Another powerful day for Render. Render's already been another one that has been exploding nicely, coming to its EMA ribbon, now bouncing. If you've made it this far into the video and you someday want to be able to read the markets, do technical analysis, trade as we are doing on this channel, then perhaps you may want to check out my free technical analysis from scratch course over on Skillshare. For those who aren't familiar, Skillshare is an online education platform. You sign up for a nominal amount each month and you get access to a wide variety of different courses. I personally use it to learn all sorts of things, from video editing to financial to using Excel and various other bits and pieces that you may want to learn. It's far better than YouTube on those elements, because on YouTube everything is about retention, whereas with a course you can put things in a structured curriculum, and that is exactly what I've done with my TA course. It's completely free for the first 30 days. If you click the link in the description, ijaz.uk/TA, to take advantage of the TA course. Let me know what you think about it, and let's get back into this video strongly. And this is why I always say, buy from positions of strength. Do not be chasing Render at $2.20. Instead, wait to the bottom of this red candle here, and you are buying at 127. Look at the difference. 220, 127. It's almost a 50% retracement. What a way. That's the way you wait to buy on these pullbacks. Everyone's FOMOing in here at 220, you're buying in at 127, and you're already, if you bought in on the dip here on Render, you're 32% up, with looking to go back to the peak, which will get you 70% up. And that is how you buy the pullback. So look for positions of strength. Do not chase the FOMO. I know it sounds basic, but it's difficult to do. When the market's screaming, oh, look at Render, you want to chase it. Another one that's doing that is Optimism. Had a really big run up, trying to bounce from its EMA ribbon again. These are the positions where you want to buy into the EMA ribbon when it pulls back. But it's hard. Everybody here is like, no, everything's going to fall down, it's going to get worse, But that's where you want to be buying, from positions of strength. Now, where could we be heading from here? Well, we need to take a look at a few things. But before we do that, we need to understand, was this CPI reading good? What are the concerns here? Now, crypto is moving, which is interesting, but from a traditional markets point of view, the reading is not great. We've just shown that inflation has not notched down by that much. And this is now going to get a lot of people worried that there is real sticky, entrenched inflation. Why are we not seeing this rotation down, particularly on the service side of inflation, the service elements? Why is there still strong wage growth? Why are the job figures still coming in hot? Could it be that 3.5, 4.5% of that 6.5% inflation is sticky, entrenched inflation? And this is what gets markets worried, because if it is, this can mean Jerome Powell is going to have to continue to slam the brakes on, increase interest rates, and potentially drive us into a recession. This is the fears around the traditional markets and why the markets are red. But right now, crypto isn't bothered, right? Crypto is moving today, and it's moving up quite strongly. But I do need to heed a word of warning, which is I'll always come back to where we're at right now. Where are we, guys? We are sitting here on our weekly candle on Bitcoin, having been rejected so far from our EMA ribbon. The bears decided to step up on this candle right here at 24,200, right about here. They stepped up and said, nope, you're not going any further. But the bulls needed to get back above 25,500 roughly to regain the weekly EMA ribbon. So now the question is going to be, are the bears for real? Can the bears literally go and send us back down there? Or is this all just a little bit of a last gasp effort from the bears and the bulls are going to step back in and start working our way back up to the upside? That is the question we need to be asking ourselves right now, and that's what we need to be looking at. Can we get a strong weekly candle come in? Whether it's this week, whether it's the week after, can we start reclaiming this EMA ribbon? Create a higher low, which is curl around here. Don't come back down into the 19s. Don't come back down into the 18s. Collect some support from here and work our way straight back up for our next move to the upside. And the next one is where we want to reclaim our EMA ribbon and hold it. Then, once we've reclaimed that EMA ribbon, then we can talk about getting out of the bear market, trying to move into a sideways market, and preparing ourselves for the eventuality of moving into the next bull market. So no, just because Bitcoin's pumping a little bit today doesn't mean we're going into a bull market. Just because we're getting rejected from this EMA ribbon doesn't mean we're going into deep debt levels of 10,000 on Bitcoin again. No, let's be pragmatic. The bears stepped up. We expected them to. We had 4 weeks of craziness here on Bitcoin. Fine, the bears had 2 weeks here. They pushed us down 3.4% and they pushed us down 5%. Now, can we push the accelerator again and see if the bears actually have substance or if that's their final gasp? So exciting times here in the market. Really interesting to see that decoupling, because historically, if you go back years ago, Bitcoin would move on its own trajectory, and that's got a lot of people frustrated seeing that Bitcoin is waiting for the traditional markets. Why are you looking at CPI? Now, obviously, it makes sense why we look at CPI. It makes sense why we're looking at the jobs figures, because if the Fed is not on your side, money is not flowing, then these kinds of assets don't move as fast or pump as much as when you're in a tightening policy. So it's really important that we bring inflation down, we do get the Fed back on our side, we stop this tightening. But at the same time, it's interesting that people are taking a stand and saying, you know what, Bitcoin at these levels, I can't risk it. If we're going into our bull run right now, I need to be loading my bags. And that is why you're seeing certain coins and certain projects starting to get bid up now. People are going, hang on a second, we're coming through the worst of this. Inflation is coming down. It's not going higher. We're not creating new highs in inflation. So I need to start positioning my portfolio. I need to get in this market. I've just seen what Bitcoin just did in January, and I don't want to be missing out on all them gains. Hope you guys enjoyed this video. Don't forget to smash the likes. Don't forget to subscribe to get caught up on our video from earlier. Click here, and I'll see you in the next one.